it takes a certain mindset to run a liquid crypto portfolio.
It does.
A certain, you build portfolios in a certain way, etc. And VC is very different, right? Because you don't know what the winners are, while in the liquid book, your entire fucking job is to concentrate risk in the things that make the difference. How do you run that dichotomy in your head? Because you're either kind of built one way or the other. I've seen a lot of VC people trying to do liquid. They can do well, but generally it's harder. Or the liquid people trying to do VC.
And it typically doesn't work, right? Yeah.
No, because we're so used to take a theme, bet on that theme. It might be the wrong, you know what I mean? It's just complicated. Or too complicated portfolio.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal will talk about Bitcoin dominance and the altcoin rotation, Trump's token and its impact on crypto regulation, and how long the next crypto cycle will last. Let's catch him up to know more.
I also have a strong opinion, obviously running a fund of hedge funds, that the hedge fund industry is undercapitalized versus the VC industry. So valuations, tokens come out, most of them fall 70, 80, 90%. Right, this is they're dumping on the public. It's not. It's because there's no fucking secondary market yet. So to be a hedge fund and to find the right ones, and I spoke to Richard Galvin about this, is you get some great opportunities, right? You choose the ones like, Sui would be a great case. Comes, dumps, you buy it, whether some of these others, whether Celestia or whatever is one of those, I don't know, but that's what a hedge fund's job is to find the rubies in the dust. There's a great relationship there between the illiquid markets and the liquid markets.
Yeah, and I mean, this is, I think, one of the things that we look at on the hedge fund side is, there's a lot of short opportunities in crypto, as to your point, right? I mean, I wrote about this in our last market update that if you look at the layer twos, so your kind of Optimisms, Arbitrum, Polygon, and even Blast, which was launched last year, they were all down over 50% for 2024, right? And why is that the case? Well, there's probably some structural Ethereum issues, and Ethereum underperformed, and maybe there's not a lot of interest in L2 tokens. Who knows, right? Vesting schedules. Put your narrative out there. Those are great trading opportunities, right? But shorting in crypto is the fastest way to end your career. So you have to do it in a very kind of tasteful, tactical way. And this is why, I get back to the SAB 121 repeal, if the banks can actually start, frankly, offering prime brokerage.
Prime brokerage, yeah.
They're not going to focus on the longer tail of tokens. However, the broker-dealers that we trade with today, like your Galaxies, Falcon X, DRWs of the world, they're going to have to start offering derivatives on the longer tail of tokens. And so will this, stop the bleeding, so to speak, by some of these projects that can't seem to catch a bid? Maybe. But I think more importantly, you have safer ways of being able to trade these things. And so we're really excited about that potential opportunity because the crypto native broker dealers that offer derivatives currently in crypto, I mean, no disrespect, but good luck competing with Goldman on this, right? It's just not going to work. You're going to, I think they'll see, good for us, spreads will collapse, but also they're going to end up taking a lot of that flow if they can start to onboard folks like Asymmetric as clients. They're going to have to compete elsewhere, and that's likely going to be the longer tail of tokens.
Robert Kiyosaki, the well-known author of Rich Dad Poor Dad and a vocal financial expert, has warned that Bitcoin could crash soon. However, he sees this as an opportunity rather than a disaster. According to him, financial downturns are the best moments to build wealth, when assets go on sale for those who know how to take advantage. His statement followed Bitcoin's sudden drop of over 4%, slipping from $106,000 to $101,500 $564 after U.S. President Donald Trump imposed new tariffs on major trade partners. While gold and silver also dipped slightly, Bitcoin's reaction was the most dramatic. Despite the losses, the world's largest cryptocurrency has already begun to recover, now hovering around $102,273. Kiyosaki believes that crashes are simply buying opportunities for those who understand long-term investing. He remains bullish on Bitcoin, hinting that he plans to buy more once the price falls further. However, he remains skeptical about Bitcoin solving America's deeper financial woes, particularly the country's massive national debt. With U.S. debt soaring past $36.4 trillion, he warns that the real crisis lies in ever-increasing government spending, which he believes Bitcoin alone cannot fix. Interestingly, Trump once suggested using Bitcoin to help manage U.S. debt, even proposing a strategic Bitcoin reserve. With Elon Musk and Vivek Ramaswamy now heading a new government efficiency department, financial strategies may take an unexpected turn. Whether Bitcoin becomes a national asset or not, Kiyosaki remains firm in his stance. Wealth is built by those who seize opportunities when others panic.
Look, I've been a technologist and a trader for 25 years now. I started a company, bootstrapped it years ago, an open source enterprise infrastructure company, raised over $40 million in venture, and sold that business in 2019. I started doing angel investing and advising to startups. But I've been trading this entire time too, just mainly on my own personal balance sheet. And when I kind of was proposed the opportunity to join a fund and then ultimately ran my own, my mindset was, hey, crypto venture, yes, there's, some fundamental views that you need to have, like, for example, the consumer-based fund that we're going to be launching. You have to have a kind of hypothesis here and thematically invest in that, right? However, the big difference is that we know, and you know, that the liquidity events are way faster in crypto. And that requires, frankly, a hedge fund, trader or portfolio manager's mindset. For example, when I'm looking at some investments, and I won't name the investment in our previous VC fund, but this came across to me as a deck that was like at a $40 million valuation, and I was like, way too rich for a pitch deck, right? I said, if you come back to me and kind of build this, I'm happy to pay a higher valuation because I knew they were issuing a token soon, right? So you look at it and go, is this a long-term 10, 15-year investment, or is this a trade? And I think that this is one of the things that's lost on a lot of VCs because, frankly, they're not traders, right? It doesn't mean that I'm dumping my tokens that I invested in this private round. It means that I can actually manage the risk of that in the VC portfolio, kind of like a hedge fund manager, right? And that is one of the things that I think has been kind of our superpower. We've done extremely well out of Venture Fund 1. Our asymmetric Bitcoin DeFi Venture Fund 1 is doing well as well. And it's because we have this mindset. We do have these fundamental views, but we have this skill set of understanding how to manage the liquid side because it comes way faster than I think traditional VCs expect.
Wall Street took a sharp downturn on Friday after the Trump administration confirmed new tariffs on Canada, Mexico, and China, escalating trade tensions. The announcement rattled investors, sending major stock indices into the red after an initially positive session. The S&P 500 slid 1%, falling to 6,045 points, while the Dow Jones Industrial Average lost 0.8%, and the Nasdaq 100 dropped 1.5%, reversing its earlier gains. Energy stocks suffered the most, while the communications sector managed to stay slightly positive. The U.S. dollar surged, strengthening against major currencies, with the Canadian dollar plummeting to its lowest level in 9 years. Treasury yields spiked as investors grew concerned about inflation, pushing the 10-year and 30-year yields higher. Gold struggled against the rising dollar, losing its earlier gains. Meanwhile, Bitcoin wasn't spared from the turmoil, tumbling over 3% to $102,000, as investors moved away from riskier assets amid growing economic uncertainty. The idea of the Federal Reserve holding Bitcoin as part of its reserves has sparked excitement among crypto enthusiasts, but a top Fed official has poured cold water on the speculation. Austin Goolsbee, president of the Federal Reserve Bank of Chicago, clarified that the Fed is legally restricted from adding Bitcoin to its balance sheet. His statement echoed earlier remarks by Fed Chair Jerome Powell, who confirmed that the Federal Reserve Act prohibits such a move and that there are no plans to change the law. Despite this, Powell's recent comments on Bitcoin have caught attention. He acknowledged that banks could offer cryptocurrency custody services following regulatory shifts, leading to a temporary Bitcoin price boost. Powell has also compared Bitcoin to digital gold, a narrative embraced by many crypto supporters. Meanwhile, the push for Bitcoin reserves continues at the state level, with politicians like Cynthia Lummis championing efforts to make the U.S. Treasury hold Bitcoin as a strategic asset. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.